Okay, so hi everyone. Thank you, Henry, for the introduction. My name is Pierre. I work at Starquest Capital, which is a VC fund based in Paris, dedicating to invest in societal impact and technological projects. So to sum it up, on the one hand, we want financial performance, and on the other one, we want to do good to the planet. But how do we do in case of dilemma? We're going to try to address here this question by taking different points of view with Haakon, a managing partner at Katapult, Accelerator, Laurence, managing partner at Citizen Capital, that have a more venture approach, and with Kyle, head of origination at Bridge Fund, and Chris, who is senior VP at Bain Double Impact Fund, that have more growth approach. So maybe you could present yourself shortly, Haakon.
Sure. So yeah, Haakon Brunell, managing partner of Katapult Accelerator. So Katapult Accelerator, should say briefly what it is, perhaps? Katapult, yeah. So it's an impact tech accelerator. So our mission is to build the world you want to live in, and we do that by working with founders from all around the world that are using technology and profitable business models to solve and address opportunities in parts of an environmental or societal challenge. And we invest 150K in each US in each of the startups we work with, and we have a residential accelerator program for that.
Thank you, Haakon.
Hello, I'm Laurence Mehaignerie. I launched 10 years ago now, an impact investment fund, one of the first in France, I think, that's called Citizen Capital, that aims at financing, well, historically, SMEs in a growth aspect with business models that were already sort of identified, and investing 1 to 4 million euros. And more, with time passing, we are tending, the market is bringing us to enter earlier and earlier into companies, and we observe that if we want, as Benjamin said, to turn the greatest challenges into opportunities, you need to invest pretty early in companies.
Great. Hi, I'm Kyle Bentwood, head of origination at Bridges Fund Management. Briefly, Bridges was founded in 2002 to effectively test the thesis if you could use private capital to back high-growth businesses that were looking to tackle a particular societal or environmental challenge and deliver market returns. And since that first fund, we've raised just shy of £1 billion across a range of funds, early-stage venture and late-stage growth, property, social impact bonds, and recently we've raised an evergreen vehicle, looking for the best ways to scale businesses and maximize impact. And everything that we do at Bridges is through an impact lens, from sourcing to diligence to operational improvements, and maximizing the positive impacts of our portfolio company is what drives me and all of my colleagues.
Thanks. So I'm Chris Cozzone. I work for Bain Capital Double Impact. So we are a business unit part of the Bain Capital platform, which is what you'd call here a mainstream asset manager of managing over $100 billion across multiple asset classes, from large cap private equity to debt to hedge funds, venture and real estate. And we were started 3 years ago to try to find out how impact investing could be applied to the other kind of 99% of the economy, which is not the disruptive technology, but more the small businesses and large businesses. And so we're a bit of a laboratory, learning as we go. We have 8 investments so far, and I look forward to tell you more about our approach today.
Okay, thank you, Chris. And maybe since you have different approach of the job, you could give us your own definition of an impact investment?
Yeah, sure. So first, it's pretty simple. How we think about impact investing is to have a measurable societal or environmental positive impact alongside financial return.
Really short one.
Well, in fact, thinking about the definition of impact investing, I think it's pretty interesting to question what is impact investing today, because well, at the same time, we hear that 0.1% is invested in impact through the world. And at the same time, we see major mainstream funds announce, for example, a 1 billion impact fund. And that questions what really is impact investment approach today. And when we raised our first fund 10 years ago, most investors were saying, well, you're really courageous, that's really great. We'll introduce you to our foundation, our charity. And that's, I think, what really changed in the 10 last years is that today, major institutional investors come to us saying, well, what are you doing? Because we're interested in developing an impact approach, because our clients are really asking us what we're doing with their money for the planet and for the human beings. And if I gave my definition, it would hold in 4 points. The first point would be intentionality. That means both investors and investees have a clear goal on what they want to achieve in terms of major social or environmental challenges. And it's not only about measuring impact, because there's a confusion right now on what. Well, everyone wants to measure impact now, which is positive. But having an impact investment approach seems to me as it's at the real beginning and at the very top, what's our ambition? What do we want to focus on? And in terms of strategy for an investment fund, that means starting with a sort of impact plan. What do we want to do together in these 4 or 5 years together in terms of impact? And that impact plan is incorporated to our shareholder agreement. The second point is additionality. If the value, well, private equity is basically to be able to bring a company from point A to a point B, and impact investing has a more holistic view, trying to address also help deploy the social strategy of the company. And that's why there's a debate right now on whether funds that invest in listed companies could be impact investment funds. And there's impact is very attractive for a whole lot of people right now in terms of branding, and attracts people to change ISR or SRI thematic to an impact thematic. So that questions, well, if you're in Total, Schneider, and you have 0.00% of the company, how can you bring any additionality, and how can you, well, take this challenge we heard before to address a challenge and to turn it into an opportunity. Third aspect is measurement, and measurement. I think we all are into measurement experimentation, and it's very important to measure, but it's very frustrating also, because you never quite manage to measure the depth of the impact you would like to see measured, and that's why I think quality measurement is also important. We're sort of obsessed in quantity for the moment, but measurement, I think all of our funds are putting lots of human resources on progressing in measurement. For example, next step will be to have external verification, and that's important for my last point, which is alignment. Because if you have a double bottom line promise to your investors, well, you have logically a double bottom line incentive for your team. So the way we found out this, solution for this is to have half of our carried interest linked to social performance and half of our carried interest linked to financial performance, which means, we're getting pretty serious into measurement. It's a difficult task.
Surely. Thank you, Laurence. Maybe Kyle?
Yeah, no, sure. That was great. I'll try not to repeat what's been said. I mean, for us, it's all about lockstep. It's finding the drivers of positive outcomes in companies that are completely aligned with the commercial value in those companies. And perhaps I'll just talk about how we do that. So we work very closely with the impact specialists at Bridges, alongside the management team of the company we look to invest in. And we work really hard to try and identify the 3, 4, 5 key impact metrics which really drive the value in that business. And that varies from business to business. And then we'll look to build tools and methodologies, and we've always looked to share at Bridges some of the tools and methodologies that we have with the industry to effectively measure and report on that impact. But fundamentally, where you get to, if you scale businesses from a growth perspective, you should also be scaling them from an impact perspective. So a really brief example, we have a business called A World of Books, an amazing business which recycles and re-commerces used books online. The key metrics for that business, one is the money that we pay charities for the books, which is not only good for the charities, it was previously a cost to them, believe it or not, to have the waste taken to landfill. But it's also important from a relationship perspective with a key supplier. And secondly, we track the proportion of books which we re-commerce versus recycling. Because for every book that we re-commerce, that's not only better for the environment, that's also much better for our bottom line. So I'd advise you all to look at the Impact Management Project. They've just released their 3rd phase at the UN General Assembly, all about defining impact, measuring impact, and reporting impact. And that's all key to understanding lockstep.
Thank you.
Well, in line with Kyle, I'm actually absolutely in agreement with Laurence and Kyle, and we share a lot of these frameworks in between measurement, additionality, and what you'll see on our mission statement is we're looking to invest in mission-driven management teams or founders. Back to kind of the mission is at the heart of it all, and how to ingrain that into the business if it's not already through governance, and in businesses which have an intentional social and measurable social environmental impact. I think, given the audience, and we've been talking at you a lot, I've actually loved to spend 2 seconds getting your feedback on kind of how we are thinking about, scaling impact investing, beyond growth. And if that's okay, Pierre, may I ask a question to the audience? Or?
Of course.
How can you raise your hand if you self-define yourself as a capitalist? And capitalist, I mean not politically at all, I mean economically. Could you raise your hand? Don't be shy. So I'm seeing about 30, 35%, 40%. Is that right? So that's interesting. So we surveyed actually millennials in the US, and that came out at about 25%. And it was a fascinating outcome for us because, looking back, 200 years, capitalism actually had a lot of positive outcomes. You had, we have the lowest levels of poverty versus 200 years ago. Still a lot to do, don't get me wrong. We're driving cars. We have, super computers in our pockets called iPhones, and a lot of you founders here are motivated by your stock options or your management equity. That's that's all capitalism for it. But it's almost a bad word. And frankly, if I were you, I probably would not have raised my hand today because we've been disappointed, almost angered sometimes by what corporations and business has done in the past 40 years, and that's really looking back at businesses which have kind of through their governance and fiduciary duty, the duty to maximize pretty much 2 things. One is shareholder returns at all costs to all stakeholders, whether it's the planet, their employees, or their communities. And basically the second objective is not breaking the law. And if you're doing those 2 things, you're doing things right. And I think, what we think is, and maybe the right term is not impact investors, but, looking at, the global community of businesses out there, we should be able to hold businesses at a higher standard than those basic standards, and to be good citizens, and intentionally good citizens, is something we can measure. And so that's pretty much the foundation of Bain Capital Double Impact. And disruptive innovation is absolutely critical, and it's something that we actually invest in partly in our fund. But when we're looking forward, that's 1% of the employees or the businesses in the world. And when we look at the other 99%, those 99% are actually the mainstream economy, the PME, as you call in France, or the SMEs, and sometimes listed companies. And in finding how we can raise the bar of standards of how business is done is part of the kind of laboratory that we're thinking. So we believe in mission. I think mission is really at the heart of delivering impact within businesses. I'm a huge fan of the recent laws in France of entreprise à mission. I'm a huge fan of B-Labs, in backing mission-driven businesses and management teams, because I think that's the basis of investments, and that's really kind of what we're trying to explore. But it's still a lot to do.
Thank you, Chris. And maybe Haakon, could you tell us more of your vision of an impact investment and your preference between impact business DNA that you can empower with a traditional approach, or the contrary?
Sure, I can do that. And I also want to sort of, because I raised my hand in the last, in your question there, which I think was a great question. But I think also that, then it's a matter of also definition, what is capitalism? And I think, your definition that you just gave was probably, I wouldn't have raised my hand to that definition. I think we have a little bit broader view of what capitalism is and could be. I think the fact that we're sitting here as investors, show that still, like it or not, we are using monetary measures to scale companies and scale impact. And I think that is our main view as well. Is that we want to solve the SDGs. It's 5,000 days left to we need to solve all the SDGs, and one is green and all the others are red or in yellow. So how do we scale that as quickly as possible? And I think then for us, working with tech companies, having a profitable, scalable business is just the best way we see of scaling impact. To your question, I think the answer is a little bit like Winnie the Pooh. Yes, please, both. So we want to see both an intention, a mission, and you mentioned, I think, intention as first of your four parts of the definition. I fully agree. We want to see an intention of the founder to really tackle and solve a grand challenge, and this is and it was mentioned by Future Positive Capital earlier today, the number of 88% of millennials wanting to work for a higher cause, and what we see is that when we are privileged enough to work with early stage founders, right? And we see for the last batch we had 1,500 candidates for 12 seats, so it was sort of harder to get into our Katapult Accelerator than Y Combinator. They're 1.5, and Harvard is 7 times as easy. So we see sort of a whole undergrowth of millennials and founders out there that want to join this cause, this mission, if you will, and some of them decline one of the big 3 accelerators in the US to join Katapult. So that is all good news, because then we can talk and we can sort of try to steer things in different directions, but at least it shows that the undergrowth is there, and then change will come. But back to sort of my early initial also definition. I mean, we want to see both. We want to see both intention to solve a big problem, and that is why we're working with your business, and also we want to see commercial abilities to actually scale the company, and of course we will help with that, but we need at least to see signs of both initially as well.
Okay, thank you. And maybe to conclude, because I understood we have 4 minutes left, could you tell us about a company of your respective portfolio that does conciliate strong economic profitability and societal or environmental impact?
Sure, yeah, I'll jump in. 4 minutes, so I'll take about 45 seconds. We backed a schools catering business called Innovate Services earlier this year, which is a wonderful business. And we always start with what is the societal challenge? And what are the business models that are helping to address that challenge? So the challenge was childhood obesity, which is a global issue. 1 in 3 children leave primary school either overweight or obese in the UK. And actually the best way to try and address that as early as possible is through high quality nutritional school meals. And actually if you follow the logic theory through, a young child that's had a hot meal will pay attention better, will behave better, and will ultimately have better outcomes. The company that we invested in competes head-to-head with some massive companies in the UK and is successful because they sell to the schools on quality, on supply chain transparency, on all the amazing things they're doing around their food and educating the parents and the children around their foods, because the schools get it. And that's what we see. Impact investing is that the end customer is completely aligned with the company.
Thank you.
I'm happy to jump in too. So our first investment out of the fund about 2 years ago was actually in partnership with Kyle's US fund, and it's called Impact Fitness. So Impact Fitness is a gym company in the state of Michigan in the United States. And long story short, given time, we found an extremely mission-driven management team there who, as the CEO would say, he lives for getting people off the couch, and he wants people to go to fitness. He a veteran and believes that fitness is the root cause of healthy living, and we really like backing him doing that. And furthering the mission, one of the things we invested in, back to your point, Laurence, which is pre-investment aligning on what the strategy is 5 years down the line, what we want to achieve for impact goals. We wanted to open gyms in places where there hadn't been any gyms in the past, and that's in what we call fitness deserts, which are rural areas in Michigan where there has never been a gym, or the only fitness facility were maybe $50 or $60 a month, which is unaffordable for most of the population there. And so this is a $10 a month model, which we brought to areas where there were never gyms before. And the lockstep, as Bridge, as Cal mentioned here, is that by being the only affordable player, this is a great value proposition, and people become members. The really attractive part, which got us excited from an impact side, is the metric. One of the metrics we track at the board level is the number of members who've never been to a gym in their lives. And so, consistently we managed to track about that being at 40%. So imagine, a gym with 5,000 members, you have 2,000 people who you're bringing to the gym for the first time because of, this new value proposition, which we find extremely exciting through this access.
Yeah, I can.
Yeah. So, of course, all the companies we invest in have both elements. So it's hard to pick one, and it's always hard to pick one when you are doing an accelerator also, because you kind of should be kind to all the children in a way. And I see some from our current batch are in the room here today. But we invest in, so we work in companies in health tech, education, renewable energy, financial inclusion in emerging markets. I'll pick one from our last batch. This was a West African founder that was in coma for 1 week when he was a kid because he was given fake medicines for his asthma. So he almost died from getting fake medicine in the pharmacy. And 50% of medicines sold in sub-Saharan Africa are fake. I think 20% in Southeast Asia and 6% in the US or so. Numbers are sky high. And the farm industry is huge, right? So this is a big business. So he and a bunch of other, or a group of other people from Yale, they all went to Yale and they decided to solve this issue. Companies RxAll, before demo day, they actually raised their next round and reached $1 million US in revenue first year, and is now, their spectrometer technology and AI backbone, which can then detect whether medicine is real or fake, is now being deployed in West Africa and in Singapore and Southeast Asia. So that's a nice example, I think.
Thank you. Maybe Laurence?
Well, I could say a word about Open Classrooms, which is an online education platform. And when we invested in 2016, it was a 6 million fundraising. And the two entrepreneurs came to us. They started this at 11 and 13. So for years, there was no business model. And when they started, imagining business models for this platform, they had a very strong conviction on the fact that they wanted to address the base of the pyramid, which are people who are badly or not qualified in an important way, not exclusively, but, and they had a very strong commercial success, and in only 2 years, so this year, they raised 50 million euros with an American fund, General Atlantic, very mainstream fund. And the whole issue now, which is very interesting, is they incorporated, before the fundraising, in their statutes, their purpose, saying, we want to address the base of the pyramid, and we want our mission, our purpose, is for education to be more accessible. So guys, you're coming in this new round table, you have to know that that's our mission. So now they're questioning how, with a very, very strong growth, from 70, they are now 200 people in less than a year. They are going to keep their mission strong. And that's a real questioning. And what was said on blended finance was very interesting, because I believe, I'm not sure VC investing can be the only way for this type of startups to maintain and really continue in time delivering impact. And I think blended finance can help, for example, open classrooms to grant the part of the impact they want to deliver while growing very fast.
Okay, thank you, Laurence. Maybe to conclude, we can sure say that there is a convergence between impact and VC or P investing, and that time will be our friend in that quest.
Thank you. I'm going to just make a very brief wrap-up, because I was asked to do that. You've heard from 9 of us. This was just a teaser of a conversation that I hope we can continue these 2 days and beyond. I would have loved to hear your questions or your comments. Unfortunately, we are limited with time, but I've learned a lot, and I have a few takeaways that I'd like to share. The first is disruptive technologies is accelerating the way we are going to be reaching the goals of the sustainable development. And this is something that is clear, it's here to stay. Impact investing, or investing for impact, or however you want to call it, it's here, has left the gate. We are little by little mainstreaming, and the idea is that capital is needed in all different kinds. So the entire value chain of capital provision, from smart philanthropy all the way to commercial capital, would add value to the need. It is too great of a problem just to stay siloed and to stay dogmatic in one bucket. We are all trying to solve the world's greatest problems, and the capital is needed no matter where it comes. However, impact and scrutiny is important. We are impact investors. We need to pivot the way the financial services has been functioning in order to make sure that we reach that. With that, I would like to ask you for your applause to this great panel that allow us to wrap up.